Good morning, everybody. Welcome back to Strongman Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term Boglehead investor. I'm author of the book, Stop Being a Broke Loser. It's on Amazon for $3. And not a big fan of Roblox stock. I know, you young Gen Z millennial creatures are probably going to be upset with me, but I don't feel bad about it. Anyway, let's talk about Roblox. What is Roblox? Let me share my screen here. I'm going to share my screen, okay? So, I actually went on Roblox.com and I created my own profile. So if you want to hook up with me, my name is strong_man PF. Okay, I tried to do the whole thing, but it wasn't enough. So, when you go on Roblox, it's basically this website where people can go on and they can create games or they can play games that were created. And it's free. Like, you can actually go on there and play for free. You don't have to pay anything. However, of course, this is a freemium model. So you actually do have to pay a little bit of money if you want to, buy certain avatars or upgrade your person. Like, look at my avatar right here. Look at this creature. Like, that's so boring, I want to actually spruce him up. Let me go to the avatar shop. So you get all these characters that are free, and then you have these little tokens right here called Robux, okay? So if I want to buy a zombie animation pack for my little whatever, Strongman PF, I mean, I thought of a name, but I can't say that out loud. You can go buy these Robux here, okay? So to go buy Robux, you click on Robux, right? You have this little money man up here. Buy Robux to purchase upgrades for your avatar or buy special abilities and experiences. And you can earn Robux. Well, so if I want to buy 400 Robux, $5. And if I want to get 1,700, that's $20 freaking dollars. Well, that's pretty freaking expensive. Crazy. Okay. But even better, you can actually subscribe. You can pay a monthly subscription, and that allows you to get cheaper Robux. Let's see how much a subscription costs. Get premium. Okay, so I get 450 Robux a month for $5, and then I can get up to 2,200 Robux for $20 a month. Wow. And I get exclusive items and discounts, premium benefits within experiences, and blah, 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 blah. Okay, that's pretty cool. Well, actually, that's not cool. It's a freaking ripoff. If my kid ever played this and started spending money, I'd probably beat him a little bit. I'm just kidding. But here's some of the games. So let's say you want to do removal plus taekwondo. All right. I'm actually a black belt in taekwondo. I don't know if you knew that. I am. Removal plus taekwondo. Okay, so I have to buy this game. I thought the games were free. What is this? I guess some of the games are free, some aren't. Basically, you can buy the game and then you can go play the game with all your little friends. It's pretty interesting because you can be a creator. Like, you can create your own games. It's pretty cool. Make anything you can imagine with our free and immersive creation engine. All right, and I guess they have some kind of revenue share agreement, Robux, with the kids that create these games, and the kids probably get a portion of the Robux that's spent on them, something like that. Okay, so it's actually a pretty cool concept. I'm not gonna lie. Now, this company has been rewarded pretty significantly with the pandemic go. Okay, they've seen some massive revenue growth. So let's go look at their financials. And keep in mind, I actually used to have a model, maybe it wasn't the best model in the world. And me, Kevin, and crap everywhere. But at least I could take stuff from Morningstar and copy it down. Now, I'm just kind of screwed, okay? So I have to remake a new model because Morningstar screwed me over and stopped letting me download Excel sheets that I could paste into my model. They probably wanted to screw me over on purpose. So I just made this ghetto model where I went on the SEC and I downloaded Roblox and I downloaded their most recent financial statements, okay? You can actually download them in Excel form. I think it's called XBRL. Excuse me. And that allows you to do your own, rudimentary analysis. Now, one thing that surprised me about this company, I noticed they had a loss. So they have pretty significant losses. So their loss margin, not their profit margin, was negative 14.53%. over the 3 months ended September 30th, 2021. So basically, over the last couple months, they lose 14% on every dollar they make. However, if you go look at their free cash flow and their operating cash flow, they actually have positive free cash flow and positive operating cash flow. So there's a massive discrepancy between operating cash flow and free cash flow and the accrual basis of accounting. Now, the reason that is because of deferrals of revenue. So I looked on Morningstar, and they actually had a little interesting tidbit on here that kind of explains why they have so much cash, but they're not generating a ton of revenue. Where is it? It's somewhere on here. Okay. Roughly 90% of Robux, that's what we talked about earlier, are spent within 3 days of being purchased, but the revenue for durable virtual goods is recognized over the life of the player, assumed to be 23 months under GAAP accounting. So if you think about it from a cash flow perspective, basically the kids go on there, they buy their Robux, and then they spend it within 3 days. Like it's all gone. Then they have to go buy more, and then daddy gets pissed. But to recognize the revenue, according to generally accepted accounting principles on the income statement, you have to spread that over 23 months. That's why I think there's a big discrepancy between all this cash that's coming in and the revenue that's recognized for that. Still pretty interesting. And you can actually see on their financial statements, they actually add back deferral of revenue. Okay. Deferred revenue is a pretty big chunk of their operating cash flow. It's actually the only reason that their cash flow is positive. So interesting. But their free cash flow as a percentage of revenues for the 9 months ended September 30 is 36%. 36%. And last year it was 48%. Like that's pretty freaking crazy. You compare free cash flow as a percentage of sales. They have very positive free cash flow. And then you go look at their income statement and it's freaking negative. Okay. Now I've done some vertical and horizontal analysis on their income statement. So vertical analysis, you take everything that's on the income statement as a percentage of revenues, and you just kind of see, you can calculate margins, trends, stuff like that. So for example, I did some vertical analysis here. Let me zoom in a little bit. And I compared the 3 months ended September 30th, 2021 to 2020. So on this yellow column, cost and expensive, cost of revenue is only 25% of revenues. So their gross margin is roughly 75%, 74 something percent, which is pretty freaking good. Okay. However, their total costs and expenses are 115% of revenue. So that's why they have a freaking loss from operations. Okay. Now let's see some of the big fees. Developer exchange fees. Okay. I guess that's them paying their, the kids that are building the games. Infrastructure and trust and safety. That's them, I guess operating their servers. R&D, 27%. So these are the big ones right here. So eventually when R&D goes down, or maybe infrastructure goes down, maybe those are more fixed, at least the infrastructure, maybe. And if revenue keeps increasing, I'm sure margins will increase. So we actually see, let's see. So their loss from operations, they had a negative 15% operating margin and a negative 14% bottom line net margin. Now, horizontal analysis is comparing 1 year to the other to see trends, changes in different expenses, accounts, stuff like that. The horizontal analysis, we can see revenue from year over year is up 102 freaking percent. So in 2020, revenue was $251 million. Now it's $509 million. That's pretty, if the revenue's double, that's pretty freaking crazy. Okay. And we can see that cost of revenues, some of these expenses have not increased as fast as revenue. The only expense that has increased faster than revenue is research and development. So they're really pouring more and more money into R&D as a percentage of their revenues. And of course, general and administrative, holy freaking crap. That went up pretty significantly. Okay. So I don't know what they're doing with that. Maybe it's like stock options expenses or stock compensation expense or stuff like that. But they're actually tightening their margins, dude. They're moving towards profitability on the accrual basis of accounting, which is a good thing. All right. Still freaking losing money on the accrual basis of accounting. Another thing I noticed, weighted average shares used in computing net loss, stock issuance, 213%, increase. They went from 183 million shares to 575 million shares. That is mega ultra super dilution. Okay, that is freaking crazy amount of dilution. Oh God! Imagine having a share and then you get like diluted. Like you own like one share and then suddenly you own let's say you own 10% of the company, now you own 2% of the company. Like something like that. It's a pretty drastic freaking change. Okay, so this is the one thing that I just turned me off about this company was this freaking massive share dilution. Okay. Even with all these positive signs, very positive free cash flow, revenue growth's freaking heavy. They're reducing some of their expenses, okay, as a percentage of revenues. Even then, that dilution is freaking nuts. They're going to need to put a damper on that. That's freaking ridiculous. Okay. So let's go see how the stock has behaved recently. And then we'll just pump some numbers into everything money software because I still have to make my model. And then we'll figure it out. Okay. Let's see. Look at that. Yeah. So they had this massive freaking run up over the last couple years. So, okay. They went public March 12th. They went public they went public this year, March 12th, 2021. Wow. And then they had this massive freaking spike starting in November. So this stock just ran up pretty significantly from $77 per share to $122 per share. Looks like the time to buy, isn't it? Okay, let's see. So we got everything money software. Okay, price to sales 42. Wow, that's really cheap. Positive free cash flow. Oh, man, see, my math actually works. Look at that. Profit margin or gross margin 74. Oh wow, my math's so amazing. Look at that. Gross margin 74%. Net income negative. So big differences. And I think the main reason is between net income and free cash flow is the revenue recognition. But that probably has something to do with it. All right. Stock analyzer. So what are we going to do here? Well, since they don't have any freaking earnings on the accrual basis of accounting, we're just going to use free cash flow. So whatever numbers I put into a profit margin and PE, just freaking ignore it. Okay. Revenue growth. Now, looking back, they had 102% revenue growth year over year. And then if you compare it over a 9-month window, it's 120%. So the freaking revenue is exploding. Okay. So we can, let's be decently conservative. Let's be super aggressive. Okay. So let's say revenue is 35% going forward for the next 5 years. All right. And let's say it's 60%. This is pretty freaking aggressive. And let's say on the high end, it's what, 95, 85, 85%. Okay. Profit margin, you have to put something in there. Just ignore that. Free cash flow margin. So going back to my amazing, delicious model, free cash flow is a percentage of revenues or sales. It's 36.48 over the last 2 years. So let's just be nice. Let's say 30, 35, 40. All right. PE, don't worry about it. Price to free cash flow. Now, this is going to have to freaking come down. Okay. But just because it's a growth company, we can have it pretty high. So let's say 25, 30, 35. Probably freaking high, but whatever. And then let's try a 15% return and see what we get. Oh, look at that. I can see why the stock's trading how it is, if you think these assumptions are true. The only problem, ladies and gentlemen, is everything money got rid of their freaking share dilution calculator. So this doesn't even factor in share dilution. So if they cut you in half with additional share issuances, these numbers are massively, massively, massively over freaking stated. Okay. So just because of that, even though the stock may have potential because of those margins, I think it will be profitable one day. I 100% believe that. And I think it's a pretty cool concept. The free cash flow margins are great. And it's like, wow. But when it comes to the share dilution, it's going to freaking annihilate you. So not a huge fan. So would I buy this stock? No, I freaking wouldn't. Not in the freaking slightest. All right. Let's read some comments. I know I'm up early. Morning, strong man. You've been putting in work on YouTube. Appreciate the efforts. No problem, man. Are you going to buy the dip? What dip? You like the markets dip or Roblox dip? Is Roblox dipping? You see the last video of that chicken butt crack? He was talking S about everything money for buying Baba stock. Oh, chicken butt crack. Yeah, he tells you to go all in on Tesla, which is not a massive bubble, but oh my God, if a highly profitable cash machine stock went down, because of temporary market sentiment, you're just dumb. You got to ignore these clowns because you have to, your investment time horizon needs to be over your life. Okay. You can't worry about a stock going down this year or staying down for a year or two. It's, if you buy a great company, that's going to be a great company, 10, 15, 20 years from now, buy the stock and let it freaking ride. Okay. And if you don't like doing that, if you don't have the patience, then just max your tax advantage accounts and buy index funds. So yeah, chicken butt crack's an idiot. You to go. La Tesla. Anyway, that's it for this morning. I'm going to go make some money doing other things. The truck stop. And that's it. You guys have a wonderful day. Cheers. Oh, one more thing. Live stream. Noon today. Me, Jay Noggy, and Eric. He called them donkeys. He's an idiot. Tesla dip. I bought. Don't buy Tesla. Anyway, talk.